You're watching today's video technical update presented by FX Times. It is Thursday, September 16th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The platform I'll be using for analysis is VT Trader. This week, the market continues to pressure the greenback but is easing off a bit. The euro-dollar and pound-dollar pairs, however, is looking to continue higher. The dollar-yen started to rally after the Japanese intervention and may continue to see some dollar strength. The dollar-Canadian dollar pair has been sliding towards a range support but is developing a bottom just above. Gold continues to surge and its rally means more pressure on the dollar. It does not seem that the greenback is ready to fight back except maybe for the near term. This video is being produced at about 2:45 p.m. Eastern Time during the US trading session. First, let's take a look at the euro-dollar. Seems to have bottomed here around 1.2580, 26 area. And if the market is breaking out of this range, it may be continuing this rally. And if we project this swing to this bottom, we see another swing towards 1.40. However, we are going to first be testing this 200 moving average as the market rallies. Also, this is 1-2 swing rally that could be ABC for another decline. So there's a lot of uncertainty as the market approaches the 200 moving average. Right now it's at 61.8%, actually breaking this, so there is a bullish bias. The RSI also broke above 60 after failing to break below 40. It did temporarily, and also this came after the RSI breaking above 70. So this combination is a bullish, shows a bullish mode. Now that's the daily time frame. Looking at the 4-hour time frame, we see here the RSI continues to make a new high. So this is a very bullish signal as the market has this bullish breakout. Price action as well breaks above this 1.2950 area, 1.2930, which is this channel resistance. And now the market broke above that. If this is A and this is B, and then if we're now in C, a zigzag, we should be heading towards 1.31. Basically, we shouldn't break above 1.3160 if this is still going to be bearish. So if the market breaks above this area, this highlighted area up here, then the market is most likely to have turned bullish, with an addition of a throwback that fails to break this 1.29 area, which is this channel resistance. Then that would be another confirmation and a very strong suggestion of a bullish attempt towards 1.40. Okay, so we should be looking for topping soon in the short term, but in the intermediate term, we should look for the market to test this area to have a throwback before before determining that this is going to be a bullish attempt. Okay, so that's the euro dollar. Moving on to pound dollar, which also have bottomed up here, bottomed out, and the market is breaking out of this bottom. The RSI in the daily, however, is staying still below 60, so there isn't a very strong bullish break yet. Okay, price action did break this, but that's it's a bullish signal, but a naked bullish signal as there is no confirmation. So looking at the 4-hour time frame. Okay, we saw this market come up here, broke above this 1.56 area. That's an important area to break because it's the sort of the central pivot of this previous consolidation before the market broke down into here, into ranging and still bearish action. Now the market breaks above the central pivot of this range. And now the market sort of consolidated a bit. And you see all these candlesticks with a very sharp rejection into the direction of the trend. So this rejection is for price action that's going against the trend. And this is actually a very bullish signal, especially if this candle, so there's 2 more hours for this candle. If there is a candle that could close above 1.5650, then that's a very good sign for the bullish mode. In the 4-hour time frame, we still don't have this RSI break above 70. That would give us another bullish signal, and if that RSI fails to break below 40, preferably staying above 50, then we are already in a bullish attempt. Okay, so that's the pound dollar. Anticipate some further rally if there's a candle that could close above 1.5650 area for the 4-hour time frame. So in both euro dollar and pound dollar, it appears that the dollar will be weak going forward, especially if we have these tests. For example, the pound dollar, if there's a throwback that fails to break below 1.5550, okay, that's going to be a bullish signal. In the euro dollar, if the market fails to come back and break below 1.29, that's also a bullish signal. So that's a weak signal for the US dollar. Against the Japanese yen, however, the dollar is pairing some of those losses from a couple of weeks ago. It's engulfing last week's high and now threatens to continue higher. So the dollar is correcting a bit against the Japanese yen. You should remember a day ago, Japanese currency, the Japanese government intervened by selling the yen. So the yen dropped and the dollar rallied against that. However, in the daily, the RSI is still below 60, and if the market tops off, we actually have a negative reversal. Okay, now you see the market did break above this declining trend line. So but if it fails to break above this high, for example, the market continues to be bearish. In fact, we should actually look for this here, 86.80. This is the 61.8% retracement, and that would be your resistance for this current rally. Now, looking at 4-hour time frame, we see the RSI RSI broke into the 70 area, and this type of action would be confirming of a bullish mode. At the moment, we are still rallying. This kind of consolidation didn't really bring any correction. It was just sort of paused, and now the market continues higher, breaking these previous high here, this previous high, previous high, previous high. So dollar seems to be correcting, pairing some of the losses against the yen, although it's not able to do so against the pound and the euro. Moving on to dollar Canadian dollar pair. First, let's take a look at the daily here. Respected this top, the market respected this top and is poised to continue towards this support area. It is seeing some support here at 1.0250, where it supported the market here, and here. So at the moment, looking back at the 4-hour time frame, we are in some near-term correction, or near short-term correction that could go up to 1.0350, and from there the market may continue to decline into 1.0150. However, if the market breaks above 1.04, then we should invalidate that outlook, especially this is a very important strong resistance area. So if the market can break through it, then our continuing bearish outlook should be scrapped. Okay, and also in the daily, you see that the RSI is testing 40, so this is sort of the support for this range. Now, whereas the 60 was sort of the resistance in this range as the market stayed in this channel. Looking at gold, and gold is something that you can use to gauge what kind of expectations you can have for the dollar. Gold continues to make higher highs every day. Here is yesterday's high, here is today's high. So we made higher highs, and these are fresh historic highs. Looking at, and also these are some support levels. The first one at 38.2% at 1265. Here's the second one, 1255, and here 1240 area, preferably actually 1236 area at the bottom of this tail. And if the market breaks this third support, then we could start considering this as a topping action if we have some further pullback that confirms. break below S2 here, support 2 here, means that this bullish attempt is stalled, and we may continue to be in a sideways pattern until another break. Now here's the daily look. The RSI making new highs into the 70, so it's a bullish outlook, a bullish breakout, and we're projecting it this up here towards first 1320 area, then towards the 1360, 70 area. Okay, so gold, also the ATR has bottomed and appears to be higher in volatilities and trading activity. So increase in trading activity to rally in gold means more pressure for the US dollar, and that's how you could use this commodity, this pair, to gauge your expectations of dollar strength. And that wraps it up for today. Thanks for watching. Once again, I'm Fan Yang from FXTimes.com, wishing you good trading.